Hey guys, Justin from Deep Dive Stocks here, and today we're going to be taking a data dive into Uber. So let's go ahead and get started. If you haven't, I would definitely recommend checking out some of the other videos on my channel about VoEx, what it does, what it measures, how we interpret it, and especially if you haven't seen VoEx before, it's pretty insightful. In the graph, we see VoEx's graph here. The main takeaway is that if VoEx, which is the magenta line, or the tan line being VoEx daily, is outside of these horizontal lines, then things aren't going so well. So anytime a stock, we want its VoEx to be between these two horizontal lines, which is pretty much indicating that the stock is in a stable position. And one of the things we should notice right off the bat is that Uber is very rarely in a stable position. So we see in April of 2021, we have these nice VoEx spikes indicating this instability as the price was going up. So the natural consequence is that the price fell. And this pattern seems to have continued throughout the latter half of 2021 as well, where anytime the price went up on Uber, VoEx spiked pretty drastically into this inhibition zone, and then the price fell. So we have here, there's quite a consistent pattern of that in January of 2022. We see that happening. We see this pretty healthy VoEx spike in April. And of note, we see that VoEx fell pretty consistently into the propagation zone in the middle of April. And since then, has dropped about 30% of its value, which is probably more than what I would say consistent with VoEx in the propagation zone. But VoEx in the propagation zone does indicate sustained and consistent declines in price. But it seems like Uber lately has been having some particular issues. And so let's look at the rest of the data and see what's going on. Particularly, I imagine for anyone who's long, who wants to figure out if VoEx is going to stop its decline. So we can move to the snap graphs. The snap graphs take VoEx's behavior and run it through the snap algorithm to match it with the most statistically relevant price action over 4 time frames. So we have the 20-day or the 1 month, the 10-day, the 10 trading days, so 2 weeks, the 5 trading days in 1 week, and then the 1 trading day, which would be tomorrow. The longer term, so the 1 month and the 2 week, we see that the crosshairs are below the gold line right here, and here's the gold line. So that indicates negative returns are anticipated over the 1 month and the 2 week time period. Although there does seem to be some positive inclinations on the more shorter time frame, the 5-day and the 1-day showing the crosshairs above the gold line. So there's some slight, maybe a slight glimpse of light at the end of the tunnel, or at least in the middle of the tunnel for Uber currently. Then we can move to the hedging heat maps. So these are pretty cool because it looks at the amount and the direction of hedging that is required on a stock given its change in IV and its price. And we see after a 11% decline in price today that Uber is still in a very precarious position in regards to the hedging and the hedging that has to occur on Uber. There's a lot of things to kind of digest here. So the first is that blue is purchasing support, right? So if the crosshairs enter the blue zone, that tells us that hedging is going to be directed towards purchasing shares. If crosshairs go into the red zone, that is the selling pressure. So that indicates that all the hedging is going to be, or the net flow of hedging is going to be directed towards selling. Of note, we should see that the purchasing support maxes out at about 1.8 and the selling pressure maxes out at about negative 2.3. The take-home message here is that the selling pressure currently on Uber is significantly higher than the purchasing support, and the selling pressure is below the current price, as indicated by the crosshairs, the current price and the current volatility of Uber. So that means if the price continues to fall and volatility rise, which is the normal hand-in-hand like price and volatility movement, although not always. But if that continues to happen, we see that we could quickly run into the selling pressure, this red zone down here. And if that happens, that tells us that hedging is going to kick in and actually accelerate that downwards movement. Now, in the off chance that the price rises significantly enough to get into the purchasing support, then that tells us that the hedging will probably start to slow down some of this sell-off. Although I don't think that with its current data prints, as we'll see below, that this purchasing support will provide sufficient purchasing pressure to completely stall what is going on with Uber right now. So the hedging heat map tells us Uber is in some pretty hot water. If the price falls and volatility rises, it's going to find itself in a quickly destabilizing position where more and more shares will have to be sold. As more and more shares have to be sold, it will fall deeper into the selling pressure, and so on and so forth. And an astute listener might also notice that that is the definition of a gamma squeeze. And in fact, we see on the hedging heat map that gamma is in fact negative. So Uber is in a gamma squeeze, and like most stocks in a gamma squeeze, it is experiencing some pretty drastic declines in price. It's a pretty strong myth in the market that gamma squeezes push things up consistently. The next page, we have the expected price range graph. The dotted lines represent the 68% probability upper and lower limits for a stock's price movement from day to day. And the main take-home message here is that the Uber's price has been consistently below this dotted line, which means it's actually falling more than the market is kind of expecting or okay with, or at least what the 68% probability would tell us is the lower limit for Uber. Uber has been flying past that. Below is the volatility, and we see, unsurprisingly, volatility has been rising pretty substantially on Uber. Nothing really to take home here. That's unsurprising given the drastic price swings, or is the volatility causing the drastic price swings? Who knows? Shorting is actually relatively unremarkable, so we don't have anything going on with the shorting. The options layouts graph. So on the left, we have the way the options are currently laid out. And then on the right, we have the change in the options, where the bars represent the change in the options from the day prior, and the lines represent the average daily change in options over the past month. And we see that today, at least, there was a good amount of out-of-the-money calls opened up, a decent chunk of out-of-the-money puts opened up. And along with that, we see that Delta, it's kind of hard to say because of the big price changes and volatility movements, but typically we can see, we can go down here. So basically the idea is we want to know, were these puts purchased by retail investors? Were they sold by retail investors? Were these calls purchased by retail investors or sold by retail investors? So we can go to out of the money calls, and we see that the majority of the change in the calls today, there was an 89% increase in dealer short calls. So that means retail predominantly purchased those calls that we see up here. And I guess up here too. And in terms of the puts, so puts out of the money, we see that there was actually a net decrease in both the dealer long and the dealer short. So a little bit of a mixed message here. So this is probably a mixed bag of dealer long and dealer shorts. Here we see again that delta is negative. So delta, gamma being negative is just indicative of the gamma squeeze that's currently present. And of note, the Uber ended the day with a additional 5.5 million share hedging requirements. That means all of today's price action and volatility movement netted a negative 5 million shares that have to be sold. So pretty substantial. The expected price range graph, which is the same, or table, which is the same as the graph above, it just expanded over the next month. We see that today's expected price range, or those dotted lines, was plus or minus 3.36%. We definitely blew by that today with a movement of negative 11.58%. And tomorrow we can rest assured that our expected price range is plus or minus 3.85%. So maybe we'll only move 10%, right? What else we got? What's interesting about Uber that I wanted to point out is that it actually popped up on the market scan 7 days ago for being in a gamma squeeze. That's when its gamma squeeze started. And so it started 7 trading days ago, and already it's lost 26.78% of its value. So VoEx falls into the propagation zone, the price starts to drop, Uber developed a gamma squeeze, and then over the preceding 7 days, it loses 26.78% of its value. Pretty substantial, right? And also, nice heads up from Deep Dive Stocks Market Scan. So the main question I guess everyone would probably be interested in is what's going to happen now? It dropped 11%. Is it going to keep dropping? So The answer to that is, yeah, probably. So VoEx is still pretty deep into the propagation zone. The more long-term snap graphs are showing negative returns. So I think this tells us that even if the next few days are going to be some kind of mean reversion event where the price kind of moves back to how the market kind of like wants it to be, even though we see that that hasn't happened yet, right? So the price hasn't bounced up, for instance, like right here. So we see like the price goes below the expected price range band. So then the next day it kind of bounces back up. That's mean reversion in a nutshell. But Uber, that's not been happening. And on top of that, the hedging matrix or the hedging heat map is pretty unstable on Uber. So I think a continued bearish outlook on Uber is absolutely warranted and should be expected. And we're also going to be keeping an eye on it in terms of the market scan and monitor its gamma squeeze and how that's been progressing. So that's been a data dive from Deep Dive Stocks on Uber. I hope you guys enjoyed it. Hope it's helpful. If you like it, please like, comment, subscribe. Let me know how I'm doing. And I'll see you guys next time. Happy trading. Bye.